The biggest frustration I've had is that you have a PCE under 2%, and you had this tight talking going on all last year. So the fact that they are acknowledging that and that they might let that run a little bit hotter, to me, is very, very powerful. So now you have the accommodation that we were looking for. That's not changing. You have global accommodation. I mean, Japan over the weekend talked about 4 new initiatives that they were thinking about in terms of further accommodation. The ECB, with Germany growing 0.6% of GDP, they're not going to be able to do much. So you've got these global central bankers kind of on the same page, which is interesting and quite opposite than last year. And then you have China doing their thing. So, I mean, I think that the market has run a long way. A lot of it is in the marketplace. But I think there's a lot to be excited about, especially when you don't want to fight the Fed and you don't want to fight the central bankers. That is the old rule in investing in stocks.
Yeah. Kevin O'Leary was interesting. Pisani was talking earlier about sort of where the market is in terms of worries, and you got clear and present from the Federal Reserve that from the Fed chair that the Fed's not a worry anymore for the market. If you judge by the way that stocks have traded lately, the trade war doesn't seem to be a big worry, that it's not going to have the worst outcome. Maybe Brexit doesn't end as messy as some had feared. That's a potential benefit. And a recession, as Joe was pointing to, and some of the other data has suggested, maybe isn't in the near term either. This seems to be a pretty good environment then for the rally to continue. Is that right?
But not only the equity market. Since January 1, I have been taking solace with those that trade credit. And the credit markets, to me, have to be smarter because you have huge capital at risk here. And they are saying it looks really good. They like the Fed. They're not too worried about the Trump trade thing. Brexit's a big snoozer, nothing burger. And that would and should upset credit markets, including the international credit markets. If you want to feel that you can stay long equities, you should put a little dabble, do you, of credits in your portfolio and wake up every morning and look at the spreads. Spreads are saying clear sailing ahead, and I like that. I like bond guys. They have to be smarter than equity guys because they have a lot to lose when things blow up.
Yeah, Doc, 2019 base case for Goldman Sachs, now earnings of 173, get a year-end target of 3,000. Base case is the S&P's pushing right at 2,800 and trying to hold that key level.
Yeah, and that's interesting that they've that is contra to what some others have done, basically putting out 165, 167, 168 for earnings. To see Goldman pushing it up there.
Yeah,
to
173, 16.5 multiple gets you to 3,000 base.
Yep, and I think when Powell made the pivot, and we talked about, was there enough evidence, Judge, for him to make that pivot? Certainly there seems to be, based on that housing start number, Steve. When you see housing starts down 11.2%.
Lowest level in 2.5 years.
They were listening. They were hearing. It wasn't just the stock market. They were listening, and they reacted in a way that I thought they should.
I think that's a really important point.
And that's 3 months after his October comments.
It's an important point. If you read the Heard on the Street today, the idea that the Fed knuckled under to the market is not a place where the Fed wants to be.
No.
And just speaking of that, I don't think the Fed is waiting in the place it wanted to wait in. I think it was happy to let the economy ride, but I think it wanted to be a little bit closer to 3%. Mm-hmm. But I think Powell decided, you know what, this is close enough. Mm-hmm. Possible they nudge up a little bit if they get the opportunity. The data has to turn around. The market has to be comfortable with it. I think they want to let it ride closer to 3 so they have a little more powder. But if 2.5 is where they have to sit, I think they'll be happy with that if the alternative is a market and worse outcomes in housing.